Well, good morning. That seems to be working. And that, whoops, where'd the mouse go? Wrong mouse, wrong mouse. Nobody move. Yeah, that seems to be working. So great. Great. Okay, the purpose of this stream is my virtual journal. I can hear what I was thinking by my narration and see what I was watching, obviously, by the video. It seems to be working out pretty well. I have a commitment not to take any trades on this account off stream. And that's the reason that the stream starts now at 8 o'clock and then runs through till 1500 every day, which is ridiculously long. But I don't want to have something present throughout the day that I don't take trade on because the stream's not up, and that would violate my commitment to that in terms of transparency and accountability. There's no financial advice or, anything. It's my stream. It's my journal that I put out there publicly. So that is that. All the times on my charts and in my narration, etc., is Central Standard Time. Get that out of the road. So there's disclaimers all the usual disclaimers are also in the description here. So read through that. It's just for entertainment. It's not financial advice or anything else. It's actually for my personal use. So there we go. We're looking to open just quickly higher out of range now because it's because of this, ridiculous pop they had through Asia. Changing this title is only for my personal use. When I look back at a stream, I can see this column title and know exactly what the open type was without having to, clamor around going back and looking whatever else. It's right here. So that's how that works. All right. Now we have a whole bunch of reports out this morning, not the least of which is Fed Chair Powell speaking at 08:20, 10 minutes before the open. So that should be exciting. You can see that there was CDP and a couple of things that opened here at 7:30. Not much movement. I suppose everybody's in the hold. And there seems to be nearly a world record for talking Feds this morning. Powell's at 8:20. Williams is at 8:25. Then pending home sales. Then Fed Vice Chair Barr at 9:30. Then Treasury Secretary Yellen at 10:15. Then a 7-year bond note auction at 12. Then two more Fed speakers at 12, and Jesus, So yeah, anyway, that's pretty exciting. That's the numbers story, and that's about as complicated as I want to get. With regard to the pre-level now, the pre-market discussion and what I typically do, starting from the top down, go over here to the micro composite, which is a series of daily bars for the RTH period only. And wherever price is overlapping, I draw a market or volume profile around it. And then I get high volume, low volume nodes, which are pushed automatically to bookmap these red and green lines. I have a MC high, MC low, and an MCVPOC, which I manually enter. So what have we done? We had a big sell-off and the sky is falling and oh my God. And then all of a sudden, of course, like everything else, the market goes up to go down, it goes down to go up. And what have they done? They've traded right up through new all-time highs here, new all-time highs here, new all-time high here, new all-time high here. Yeah, get the drift. And now And now we've got a consolidation up here at the top. This is the yesterday's RTH period. So this is not showing the ETH, but we are now substantially higher than that by about 30 points. We're trading at 58. You can see right here, we're trading at 58.29. Here was yesterday's close. There's the Asia overnight. London comes in and just slams it back and forth for the entire period up till now. And now they're testing up to the top again. So what I would suggest is going to happen, or what I will be anticipating, is there will be some responsive selling at the open to, depending on all these numbers. All bets are off with, Fed chair talking and all these other guys. But typically speaking, I would expect that there would be some profit taking. I mean, if you were long all night, what would you do? I'd take some profit. I probably would have taken it before now, but at the open, I would certainly try to take some profit to lock it in. So I would expect some responsive selling. Just me. This is the ES DEES contract, and it's a Renko chart. This is the ES DEES market profile. I've already talked about the micro composite, and this is the DEES NASDAQ, which is pretty much of a correlated market. And why it's not printing out the volume profile yet, I don't know, but I guess it's a little sleepy this morning. So there we go with that. The next thing that will be of importance is the statistics and the price levels. Now, all of these price levels over here for my reference, all of the price levels are pushed from IRT to Bookmap. And that they are represented in this column right here. I will now use the statistics study to input manually the statistics associated with each price level based on the open type and just other stuff. This is the high time frame column where I manually put in all these deals over here, and here's the high and low volume nodes, which are pushed automatically. I type these in from the micro composite. This is the full session volume profile, started at 1700 last night. This is the RTH session volume profile, which reflects yesterday. We'll reset this morning at 8:30. This is the delta for this period. And this is the chart volume profile, which just graphs what's visible on the chart. I'm not sure how valuable that is, to be honest with you. And this is the column where I input the statistics and any flags, VPOC migration, et cetera, after we open. At the end of every evening, during the close when I have this off and then restart it, I put in the naked volume point of control for the most recent RTH session, which is yesterday. So this is the volume point of control when we closed yesterday's RTH session. This is the overnight volume point of control, which is typically the highest statistic, followed by the EM, the overnight mid. Now, those are a little, the relationship changes a little because we're opening higher or looking to open higher out of range. And don't forget that, Jesus, that Powell 10 minutes before the open, that's just really magical. So anyway, and as far as lines, I don't use any indicators on my charts or my Bookmap. I have the full session VPOC, which is from this one here. It's a more dark, muted yellow. I have the, I have the RTH volume profile, which is down here somewhere. This is the RTH EOC. Then there's the IB high and low, which are nothing magical. They're just the high and low of the first 1 hour of the RTH trading session. And all the rest of these are are not, there's no indicators. Probably the only thing close to an indicator is the ETH VWAP and the RTH VWAP, because they are calculated. It's volume weighted average price. And this is the mid for the RTH. So, yeah, there you go. These lines are just drawn on here from the same data from IRT that puts these flags, which are the price levels, just for my visual reference. And these graphic representation here in the heat map is just a graphic representation of the liquidity in the dome or the order book. So let's look at the statistics study here, which is the next order of business. That comes from this study, which says there's only two criteria, and that's where we are expecting to open this current upcoming RTH period as it relates to the previous RTH period close and the previous RTH period range. So we're looking to open higher. The open is going to be higher than yesterday's close, and it's going to be outside of yesterday's range, assuming we stay where we are. Then, of these 2001 days, we opened 516 of those days higher out of range. Of these 516 days, 410 of those days, price in the upcoming RTH period came back and revisited the overnight VPOC 79.5% of the time. Oop. Overnight VPOC 79.5. Bam. That's it. That's all there is to it, and that's how tough and how magical it is. 77.7% is the overnight high. Well, they better hurry up because it's going to get higher in a minute. All right. And then we can enter these for all the rest of these price levels if we wanted to. I don't do that typically, but through the course of the morning, I will enter in some more of them here, basically around the overnight mid, which is usually another one I mentioned, and that's 63.8% of the time. There are some statistics which are widely known, and by that, I assume probably more relevant because, the more eyes are looking at them, the more it's like a self-fulfilling prophecy kind of, maybe. And let's look over here. Well, I didn't show you that, but I put in the mid, okay? So, for example, there's a 97.3% chance that the IB high or the IB low will be taken out in the balance of the RTH trading session. Could be the first second after 9:30 or the last second before 1500. There's a 98% chance when we open higher in range. There is a 98.2% chance of that happening when we open lower in range. There's a 98.2% chance of that happening when we open lower out of range. Gee whiz, that's a pretty high percentage, isn't it? Pretty hard to trade because you don't know. This OR word right here is pretty important. Similar idea for the overnight high and low. So the overnight high and low and the IB high and low are pretty high, consistent statistics or probability. Both of them tough to trade because you don't know which is which. Now, remember, the IB high, the overnight low is pretty, how the hell can you miss that, right? Overnight high and low are just that. It's the full session, overnight high and low. That doesn't change. The minute we open, they don't change. The IB high and low is the high and the low of the first 1 hour of the RTH period. It's called IB because it stands for initial balance, which is an old market profile term. Who the hell, and everybody likes to make their stuff sound real mysterious and, magical that only certain people can know. Anyway, I won't launch onto that diatribe, but so there's that. Now, wherever the IB high and low are, right there's the IB low. IB high is up there somewhere above it. So that statistic says that there's a 98 point something % chance that after the IB sets, in other words, after 9:30 this morning, there's a 98 point, whatever it is, 97.3 in this opening higher outer range chance that this one or the other one, the IB high, will be taken out by price. You can also look down there and see that there is a statistic for just the IB high and just the IB low, dividing up that. So just the IB high, and this is where it gets very splitting hairs, right? The statistic for just the IB high being taken out in this open configuration is 64.1%. And the configuration or the percentage for the IB low being taken out is 58.5. Well, that's pretty goddamn close to 50-50, right? So it's a real tough trade. I don't think it's actually really tradable. What you have to do, or what I think most people do, is when they see, let's say it's almost 9:30, or after 9:30 and the IB is set, and we're trading down within a few points of the IB low, I guess the probability that we're going to take out the IB low is probably higher than going all the way across the range to take out the IB high. But that happens frequently. So, like I said, it's a tough statistic to trade, but it's a statistic. So there you are. What other ones we got over here that are kind of interesting to put down there? The previous close is 47.1% of the time. Previous POC, where's the VPOC? Okay, I'll put in the rest of those in a bit, and I have to get ready now for the TLab nap. So every day at every morning at about 6, I post the reports in the TLab, and every day at 8:20, I post this chart or this snap right here to give the folks over there a look at all the levels. This is RTH, ETH, RTH, ETH back several days, and a bunch of levels, current levels up here where we close, settlement, all that stuff. For those folks that don't have this ability to get this kind of information from their charting, like they've got Ninja or some of those other kind of things. Anyway, so I post this every morning at 8:20 on the TLab. What is the TLab? Well, it is a Bookmap Discord chat room started by a guy named Tom B. and maintained, he's there every day. And he is in my opinion, the real deal. He's a professional trader of his own account for 45 years, very successfully. He shares and perhaps why I, feel this way, he shares my philosophies about trading as a business rather than a video game, that it is a business of statistics and probabilities, that you cannot predict the market because the market is random, and the outcome of the very next trade, statistically proven, is 50-50. But the most important part, I think, why I recommend it is there's absolutely nothing for sale. So far, you don't even have to be a subscriber to Bookmap in order to. You have to obviously join the Bookmap Discord server so that you can go there, just like YouTube or anywhere else. But you don't even have to be a subscriber to Bookmap in order to go to the TLab and participate, openly post, do everything there is to do, take advantage of all of the 60-something structured trades that he's got up there under the pin at the top, and his stream every day from 10:30 to 12 and whatever else you want to do. But all of the resources there are completely free, and I think very valid, very true advice or instruction or education, whatever you want to call it. And I don't say that for any of the other Bookmap presenters. I haven't listened to all of them, so that would be an unfair thing to say. The one or two that I have listened to are just straight up internet guru bullshit. buy my indicator. This is available on my private site. I've got this. You can be one of my mentors. You can be in my private Discord room. All this crap. Same as every one of these morons that you see on YouTube or anywhere else, you know. So the only place I recommend is the TLab with Tom B. There's a link in the description of this stream to go to, you know, to get to the Bookmap Discord place and sign up, and then go to the place called the Traders Lab, right? And now I need to stop talking and do my snapperoonie here. So I will post that to the Traders Lab. Sorry, I'm not very professional, having all these windows blocked out and whatever else it is. But that's what it is. Okay. And that's how it works. So there we go. And there's the, that was the Traders Lab. And you see my post, and there you go. And now I wish I had my event thing keyed up to use. I could put that event deal on, but I don't. So I'll go now with this. So the next order of business here is to set up the trade package and then the trade control system. So what I have done is I initiate multi-brackets, which this is for the live, this is for Sim, obviously. It's a 2-lot package with both lots stop at 12 ticks. The first scale, risk neutral, is at 12 ticks positive, and the runner's 48 ticks. Once this first scale is achieved, the trade is risk neutral. The worst you can possibly do is scratch, unless you're a screaming idiot and you move your stop away from entry. You know, it's like, do you wet your pants? Do you, shit the bed? I mean, come on. So at some point here, we've got to be adults and do this stuff. So it's a 2-lot package. Now and I have a couple others in here of presets, but in this case, then you have to go to the trade control panel and activate that. I particularly use the DOM only. Now I initiate all my trades with a keyboard, and then I manipulate stops and targets with a mouse. I use the DOM because if you use chart or both, and you accidentally click inside what this column here, where you notice that it's a different, there's no volume bars, there's no nothing to the left of this line, and over here it's just inside bid and ask. If you accidentally click over here for whatever, or intentionally, you've entered a trade or put in a resting order or whatever it is. I have done that unintentionally by trying to move a target, for example, and gotten just on the wrong side of the line. So I only put the DOM, meaning that I enter my trade with my keyboard as normal, and then I can click the hell out of things over here and nothing will happen. If I want to manipulate a stop, a target, or put in a resting order, I do it on the DOM. So there's no possibility I make that mistake. And that tickles the hell out of me. So there we go. And there's one other criteria in my risk neutral setup that's important here in my trade plan, and that is that I must have an unobstructed path to my first risk neutral scale. What does that mean? If I'm up here at developing value area high and I want to target the overnight POC, I can enter that trade short because there's no levels in the way between my entry and the first scale, which is 3 points right down here. And that is a real limiting factor in the regular trading session. A lot of the time. Yesterday, it was just, they were just lined up thicker than fleas across there every 2.5 points, and there was no entry for me because of that criteria. So that is the, that's pretty important. And we'll be opening here in a couple of minutes, at which time I will start tracking the migrating VPOC in the flags column, like this. Just as an example, I will go here, here, and here. And I do that because obviously it always draws the yellow brick road. But as the day progresses, these will scroll off the left. So I can just sit right here and see where we've been and why, what we're doing. Are we reapproaching an old volume, a VPOC or not? Is it too high? Is it too low? Have we been here before? Whatever. And that's it. And we're going to open here in a couple of minutes. I'm going to grab a water and a bio break and be right with you. Okie dokie. Well, supposedly Powell is talking at this moment because it's 8:20, gone past 8:20. So somebody in the TLab said it was just a recorded 10-minute blurb or something like that. I don't know. But we have a whole phalanthora of speakers today, so including Yellen and God knows everybody. Everybody that can spell the word finance is having a chat, I think. So anyway, here we go. Let's see. It looks like the stream is flowing along nicely. It's strange that we're not, well, I'm happy that we're not doing some ridiculous gymnastics over a Powell speaking. I hope that this is all coming across right. It seems like it is. I guess that's cool. See if I can get my stream open here on this thing. Yeah. Okay. Commando. I didn't want to do that. What the hell is going on here? Oh, looky there. Well, that would have been my evaluation target right there. So we're open. We're moving. We're putting in our POC, our volume. Now, the reason I track these, I explained, and the reason that the VPOC is so volatile at the open is because there's no volume, right? It's only a few contracts. And there's that responsive selling I was thinking about, or a little bit of profit taking there. It's 10 points. I was busy typing somewhere else like a fool. But yeah, there we go. I'll now put my IRT charts on full session. RTH session. It's just easier for me to see what the hell's going on. Boy, this is so irritating. I don't know why it does that. Must be something I type that I've got a conflicting hotkeys, I guess. I guess. Okay, now if I've got everything back in business, I think I do. Hey, ball. There you go. Boop. 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 Why did that do that? It must be the same name on both accounts, I guess. So I don't need to really have that open, I guess. Really. I don't know what I'm doing here. Okay, I'm trying to. I keep my phone or one of my other machines on the stream so that I can kind of look over there and make sure it's doing what I think it's supposed to. So our responsive selling continues here for profit taking. We're also in a condition which I don't even have a hotkey for, but it's gap rules. Gap rules. Okay. Now, gap rules are an old market profile thing, and what it says is maybe easier over here. You see the gap. There is our close in our range. We opened up here, and we're trading over here. This has got to get down to here. What it says, the old gap rules say the following. If we gap, in this case, up, and price closes the gap relatively early in the session, gets from here down to here. By the way, I consider gap range, not close or settlement anyway. So if it closes the gap relatively early and trades into value and is accepted in value, there's an extremely high probability, which I don't have the statistics for to show you or show me, extremely high probability that it will trade all the way across the previous value area. And that happens on a remarkable frequency. So first of all, you got to close the gap, and then you got to get into value and be accepted in there, not rejected back out. And if you're rejected back out, there's a high probability trade will continue on in the direction of the gap. So that's my spiel on gap rules. Now, had I listened, eating my own dog food, I'd be short and I'd be up 12 points. And Billy would be a happy camper. Today is my wife's birthday and our anniversary. So, there you go. And here we have continued VPOC migration south in the direction of that responsive selling and or profit taking and or well, here we have a little bit of a squeeze. It ain't easy being squeezy. So we're at again, no indicators. This is the RTH mid, which is the middle of this mess right here. This is the RTH session volume point of control, which is a brighter yellow. That's this one. Wherever it went, this is the full session volume profile, volume point of control, which is up here. And I don't know if I mentioned this earlier, but it's real important with all of there is also nothing mysterious or magical about the POC, the point of control. It is nothing more than the price at which the most contracts have traded so far in the session. That's all it is. This right here, 1975, is the price at which the most contracts have traded so far in the RTH session, 36.18. The minute this says 36.19, it's going to jump down there. Period. That's all there's to it. There's absolutely nothing mysterious about any of these levels or why they are where they are. It's all price driven and it's all strictly logical math. And when these people start doing hocus pocus and this and that and something else, that's when and if anybody tells you that they have 100% win rate, you just spin around on your heels. And I'm out of there like a clap of thunder in a vacuum when they start talking that way. Something that is annoying, and I don't know why it's only happened since I rolled the contract, is the IB high and the IB low lines. If you can just barely see, it's like some sort of dark blue up here. This is supposed to be this green color. Why it doesn't refresh or do that properly, I don't know. It's only happened since I rolled the contract. And in a little while, at some point, I don't know, I haven't paid attention to what triggers it. They'll refresh and become green again. So go figure. And it's not even important enough for me to bother the developers. This lines thing is an indicator I bought from Bookmap. This is something that it's built, the Cloud Notes capabilities built into Bookmap, and this comes from my trading machine, and I control that completely. This line is driven by the exact same data as this flag. So, the only difference is that this line, because it's programmed by some fellows that sold it, they can set the refresh rate much smaller, like 30 seconds, I think it is. And the smallest refresh rate I can set manually on the Cloud Note column is a minute. So oftentimes you'll see one of the lines move, and then you'll see the flag catch up in about 30 seconds. And that's, here you go. The developing value area low moved up here. In a 30 seconds or so, the developing value area flag will jump up there. And that's, doesn't bother me at all. Well, there we go, the other way around in this case. Well, that's interesting. The line moved behind the flag. That's must be something I need to do with the refresh rate. And I suppose if I didn't want to be If I didn't want that to happen, I could set the refresh rate on the indicator the same as on the line, and then there you go. Now here we are at the IB low, which remember is just the high and the low of the first 1 hour of the RTH session. So as this 1 hour progresses, these lines will continue to move. This is going to, if price drops down here, this is going to move down. It just did to there. Do you see that? See that? And in a minute, it might move. It might move further. It's also important to know that we have only traded 13, about 14 handles so far in the market with a lot of news. So that's not real encouraging. Another thing here that I have noticed I haven't done, I try to keep this wound out so that I can see these grid lines. And it's about 2 handles from tick to price levels here. That gives me a consistent perspective on range and movement, which is important for me. And now, brown cow. This is nothing I can do. The short would have been up here someplace. Here would have been a good one where we had 48 out, 17 stops taken out, and then 48 to 17. That's kind of exhaustion. We're at the mid, we're at the view up, and then that short lower. But that's only 8 minutes into the market. That's pretty. So this is that VPOC migration story, which always burns my ass. It is a structured trade in the TLab, but I don't ever do well with it. And I'm tempted to take it because that's what you should do. Once you have a vetted trade, you should take every instance of it. But I continually, for example, the basic setup is there's the migration down, traded up, we traded back down. We didn't get through it. Trade it back up, trade back down, trade back up, trade back down, up, down. Now, is it going to break below here? And you would have definitely been stopped out between here and here. So that's my problem with this trade. It just I have never been able to figure out how to get obviously the setup, you can't miss it. How can you miss the yellow line moving, right? But how to identify and properly vet the setup or the criteria is beyond me. I have not been able to figure it out. And here again, if you took this, is it okay? There's buyers, they didn't get anywhere, or sellers didn't get anywhere, buyers aren't getting anywhere, and you're short anywhere in here? Well, there you are at 13, and there you are at 16, so you're tapped out. It's really, and somebody will say, oh, well, what I did was I took the VWAP to VPOC trade on that migration, and those two added together, and maybe that's the right way to do it. That would be an asymmetrical trade location, which is a real important thing to get your head around. And that is that if you take a short up here somewhere, if the context, first of all, always trade in direction of the context. Absolutely. So if you put on a short up here someplace, you know goddamn well you're wrong if it goes above this VWAP. But you have the potential to get down to the POC, which is 3 points away. It's not a great trade or a great range, not much meat on the bone, as Tom would say. Only 3 points. But if you've got 2 tick stop and 3 point target, that is an asymmetrical trade. In other words, it's asymmetrical relationship between your stop or your risk and your reward. Now, if you look at some of these targets down here and you take some of them, what's happening? Well, it's not asymmetrical, and your stop is going to be by definition of the trade plan and the package, your stop's going to be smack dab in the middle of all this consolidation and all this traffic, which means to me, the probability of being stopped out is exponentially greater. As is as would have happened here and pretty close to here and within a tick here, within a point here, of being stopped out because these are 13s, right? So you get up here around 16s and you're out. You've taken a stop. So that asymmetrical stop or trade off the VWAP to the VPOC, which is another trade in the TLab, the VWAP or mid to POC is a trade in the direction of context. So if you combine that, I guess, with the VPOC migration, it's a higher probability, I would think. And you would be scaled right here. So now you're risk neutral, and then the heat's off and, you got a big smile on your face. And Now, what some of these guys are talking about in the TLab is they shorted up here and they put an ad on right here and they shorted some more again. And I'm happy for them. I am not that quick. And that's why I don't take nearly enough trades, and I've got to do something about that. I'm trying to focus on the story of actually vetting a trade. I don't have a vetted setup. That's why I was talking about that VPOC migration thing. I don't have a vetted setup for that. That says, that I can say, okay, it has a positive edge of X amount, and then I'm going to take every damn one of them, which I suppose can bring me to trading as a business rather than a video game. Yes. So trading, if you look at trading as a business, a viable, ongoing, consistently profitable business, not a video game or gambling. And there's, if you want to gamble or play a video game, knock yourself out. But if your goal is to have a consistently profitable, viable business, it's not a fun thing. It's not an adrenaline rush. It's not a dopamine blast. It's a business. And you have to recognize or, come to peace with a couple of things. Here we go. Now the VPOC migration lower is going to come to pass, and they might start looking to try to close that gap. Anyway, you have to look at it from the point of view that and come to peace with the fact that the market is random. And the outcome of the very next trade is 50-50. That's a statistical reality. So what do? Well, I've alluded to it several times so far this morning. You identify a setup and the specific criteria that validates the entry for that setup. Then, away from the market hours, with backtesting software or however you want to do it, you capture a statistically significant sub-data set of that specific setup and criteria. Minimum is about considered 50 examples. You then calculate mathematically, do those 50 examples identify a positive edge, expectancy, win rate, whatever word you want to call it, probability, or not? If it does, then your mission in life as a trader in the live market is to take every instance of that setup and that criteria or those criteria that present themselves. And the law of large numbers will manifest the percentage to your bank account. That's really the business of trading. And that's not just me saying that. That's some of the most successful hedge fund managers and traders in the world. Jim Simmons, Renaissance Technology, Dalio, BlackRock, Citadel, Mark Douglas, as far as trainers go. Anybody that you talk to that's a successful professional, Sosnoff at Tasty Trade, it's all about percentages and as many occurrences of that setup as we can get to manifest the probability. That is trading. It's not fun. One of the advantages of that is nothing's a surprise. If you've got somehow or another a vetted trade figured out that the VWAP to VPOC has a probable expectancy, you see trade approaching VWAP, you know that the POC is above or below it, depending on the context of the day. And so you're sitting there ready for it. You're anticipating the trade to present itself. It's not a video game. It's not gambling. It's not hit or miss. It's not seat of your pants, any of that stuff. And it's not a lot of fun. You spend a hell of a lot of time standing here. I don't sit down. I have stand-up desks. You spend a lot of time in front of these screens just watching. especially in my case, because I haven't gotten what I consider to be vetted setup trades. And they have to have the exact same setup and criteria, or they're not statistically significant. You can't have one of those examples with a 12-tick stop, one of those examples with a 16-tick stop, one of those examples with a 12-tick target, one of those examples with a 40-tick target. They've got to be the same. Otherwise, you're not comparing apples and apples, and it all breaks apart. So that is the true holy grail of trading. And it's not fun. And there's a hell of a lot of work that goes into it, much more so than standing in front of the live market trading. And that is done away from the live market in off trading hours when you capture the data. And in my opinion, the only way to do it efficiently is with backtesting software. Backtesting. If you tried to capture, imagine how long it would take you to capture 50 examples with the context being the same as today. You're looking, let's say you want to vet the VWAP to VPOC setup. So first of all, the context got to be the same. You've got to be a gap up, and you've got to be a downward context. There's got to be what inputs are in the market. How many speakers are there with a Fed speaker talking? With a gap down at an all-time high? I mean, come on, think about all the parameters that would have to be equal to have this situation repeated in order to capture the identical setup and criteria. It'd take you for, how many lifetimes, I think. That's my opinion. But anyway, that's where it's at. And that's why it's taken me so long to do this, because first I have to teach myself Python so I can figure out the best way to do it. IRT has some facilities there, but it doesn't work as well as I remember that it used to, and I can't get it to properly deal with my risk neutral package, which seems so simple. It's a 12-tick stop. A first tick target T1 is 12 ticks, and the second one's whatever it is, and then you can do what ifs. Are you more consistently profitable with a 48-tick runner? How about a 36-tick runner? How about a 24-tick runner? How about a 16-tick stops rather than 12-tick stop? You know what I mean? There's a million different. That's where I think you have to use back testing software of some sort so that you can do all the what if stuff, not to curve fit, but to more or less optimize your criteria. Yeah, it's daunting. I would love to find somebody that could do it and pay them, but I can't. There's one guy that does a lot of stuff on YouTube that's quite good with Python about trading, first of all. And I reached out to him if he was interested to do this, pay whatever. And he's, I'd be happy to help, but I'm dealing with the big health issues now. And I noticed he hasn't really posted any videos for a year. Young fella too. It's really too bad, but, and I wish him all the well, but I don't want to be a Python wizard, but I can't find any way to get the results I'm looking for another way. And I wish to hell I could. Now you see how not having this wound down, I don't see much of a deal here, but in reality, that's almost 10 points because it wasn't scaled in exactly right. Yeah. But who would take the VPOC who would take the VPOC out? First of all, you never diddle in the middle. That's a unwritten law of the world. That's, I think, the 11th commandment. it looks like we're falling into a mean reversion situation now, but mean reversion from the top down because the VPOC is right at the bottom, right? So if we're talking mean reversion here, from here up, where's the mean? There's the mean right there. So what have you got? Handful of points of that, 3 or something from down here. 11 to 13. 3 points. Now, mean reversion from up here down is a different story. But you've got all these lines in the way, all these obstacles. So for me, it doesn't qualify. And another toughie for me is this VPOC trading from the middle out. I'm not saying that any of these are lines in the sand that I won't change, but I can't just change them on the fly. They have to be verified by data. Tough. And here we are only now. Well, we've just now crossed over the first 30 minutes. So let me see. So we are in the initial balance conversation. I talked earlier about the number of, the percentage of either the IB high or low being taken out in the regular trading session. There's another statistic which says, and remember that the IB low and IB high will continue to move for the first 1 hour. So this is pretty soon, this is going to jump right down here. The new IB low will have been extended. Okay. So there's a statistic that Rod at the TLab did, who's a good coder and a trader and seems like nice guy. And they call that the IB30 statistic. And what it is that he worked out that the high or low of the first 30 minutes has a high probability of being extended in the second 30 minutes, just as we saw here. The IB low was up here. 9 o'clock came and went. Boom, they extended it down to here. So that the IB30 statistic was satisfied. Then they call the old-fashioned IB statistic, the real one, the IB60. And this might be a trade that would be easily identifiable and easy to vet. It would be the IB30, maybe. Because here was the IB low at 9 o'clock. So there's a high probability that we're going to take this out lower or higher. And again, it's the same as the IB stat. It says either the high or the low will be extended. So it's not written in sand, or it's not a real hard line statistic. But one would imagine that if we're so close to the bottoms down here, of course, look what happened right after 9 o'clock. But one would imagine that if we're doing this and trading lower, that the IB low would be the more likely to be extended. I think that criteria could be coded up fairly easily. How to identify lower lows, lower highs, all that. Oh, one other thing I forgot to mention is this gray line right here. That's the correlated market correlation tracker. That is the relative location of the NQ as it compares to the ES. Obviously, the NQ is trading 20-something thousand, so it's not price, but it's a relative movement and direction. And these areas, I have to keep reminding myself about the asymmetrical location, right? How far back do you look? If you want to short here, okay, it's asymmetrical compared to this little swing high, but look at here. But up to after post 9 o'clock, you're right in the middle of all of this traffic. So do you look at this swing high, at this one? This one? Is this going to be a swing high? That's another complicating factor when trying to look at getting on a continuation in a direction. Back to the top. To the developing value area low. At some point, I think I have to go do a meeting. I better open that other machine and see. Yeah. That's a really tough one for me here because everybody with the brain on knows that there's a whole buttload of stops right above this POC, and it's the most commonly traded price, all those kind of definitions. But there's 57 out. Here's 3, whatever this one is. 2, right? So is this exhaustion? And do you short off of this developing value area low? Well, there's 3 to 11. So you're not scaled. And now you're sweating bullets. It's tough, you know. Jesus Christ. Get all I want. So what is it? 10 o'clock. All right. That's what I thought, but I wasn't sure. All right. Teams. Where am I going here? Meetings. Okay. Jesus, these people do more crap in that office than fly to the freaking moon. Okay. So there we go. So that one's set up, down a move. Back to the trading at hand. Yeah, this is a real problem for me. This is trading from the middle out, which is hard. And with that iceberg above, I don't think that's a safe a short. Oh, forgot I was chewing. Sorry. So now we're approaching the IB, the real IB 60, 10 minutes away from that. And I am thinking about the developing value area low as a level to continue down to catch the IB and perhaps close this gap. But this VPOC just above here, and then the VWAPs has me in the mid, has me spooked, and I don't want to catch myself trading. Well, obviously, anything above here is okay, considering this context, but above these swing highs and swing low, we've got all this traffic over here. So that kind of would say to me that we have, that would sort of be diddling in the middle, I think. Now we are experiencing, I see the purpose of these flags, we are experiencing VPOC migration lower. And I guess that could have been a logic for here. Another example of the IB30. That's one of the things about it. It can happen multiple times in the second 30 minutes, just as it's happened here now. Boom. So the IB's low is now going to drop down here. And we still have 5 minutes to get down to that IB statistic. The problem now, of course, is that this is basically a breakout trade. And let's go short right here. Well, let's see. There's 6 and 3 is where? Oh, where in the hell is that? Terrible. Now watch him take out the IB statistic with a high. And again, I shot myself in the damn foot. So there's a 08 above 05. That swing high was sort of a qualified entry. But where's the stop? In the middle of all of the traffic. And there's the IB stat. Now, pretty quick, they're going to have a gap close here, and I haven't put the gap parameters in my time frame column yet. And any trades down here for me are breakouts, which is not. I consider that an error in my thing. So now we're kind of mean reverting around this smaller fractal right here. How many times we're going to do that? Who the hell knows? And I'll be dropping off for a meeting at the top of the hour. All right, so they've taken the IB low. And now we're trading up to this low volume node right here, or this little distribution. Easier seen like that, I guess. And there's our gap high, and there's our, gap close, I should say. What is the gap close actually? 57.9875 looks like. 57.9875. 57. Oh, look at us go. Now, this could qualify as an asymmetric trade location because of where we are with relationship to all of this. If it wanted to be real precise, it would be up here, but then that's pretty scary at VWAP and VPOCs and all these levels up here that have got lots of stops sitting around them. These buyers here are short covering, I guess. Or squeezing out the shorts. Whatever. We have the RTH VWAP and the full session and the VPOC and just about everything you ever never wanted to trade around right above us here. Like right there, for example. And then the overnight VWAP and the mid. So what they gonna do? Is there something else? Got 139 out at VPOC and then turned around. That's I don't think a very high probable spot to enter a trade, however. It does qualify for range, of course, but this looks like they're going to keep squeezing the shorts and not necessarily close that gap. Would want to see some stops above the POC and the mid, maybe. And of course, it'll drop down to scale right here. There, exactly. And this is, oh, I'm not looking at the right chart. And this is where FOMO would step in because you go, oh, it's going to break. And then you stop is right up here and they come back up here and bank your ass. However, shorting at the RTH VWAP here would be a scaled trade at the moment. So that would be good. Oh, now it would be really good. Again, FOMO is always a big one in these instances, and I wouldn't put a trade here because of the trade location with regard to my stop. And I'm not saying that I'm got the right idea because I'm standing here not trading. So I should have listened to myself here for the short, I guess, and not been so spooked about the VPOC just above us. And now I'm down 10 points. I'm up 10 points, right? Or something. So this brings us right into this area of previous liquidity and consolidation. Right there, you see the exactly the same spot. They split the consolidation the first time. Pretty interesting how that happened. Huh? I'm sorry I didn't take that trade. I was spooked up here with I didn't see stops coming out at the VPOC and mid and ET, those levels just above here, but that was clearly the trade. Absolutely. Now are they going to do the same thing again and come back up and get those stops? Well, there we go. I'm going to get to that gap here pretty quick. That I'm sorry. That's a couple of nice shorts I've missed here, so that's pretty disappointing of me. Just not in tune here, I guess. Okay, bummer now. Have to jump across the world and hook up in another 10 minutes on the other side there. Darn, it's disappointing that I haven't taken advantage of these shorts. And if you want to get real disappointed, go over here. Oops, wrong mouse, sorry. So let's pretend I called or talked about pre-market responsive selling. And had I shorted, lower highs and lower lows off the open. Now it's only 30 points, but hey, 30 points are better than a sharp stick in the eye, right? Okay. They do that, I guess. Yeah, just disappointing. And this is the parts where FOMO can come in to get you, right? When you've missed some substantial moves and you so this is the kind of time when all the psychological stuff could come to get you, like FOMO and those kind of things. Because I'm standing here waiting apprehensive about a short right here at the POC with these two levels tight above. See how that worked out. Pull back up here again and didn't take it again, and we're still going south. So those are all complicating issues to FOMO, and you never get over your monkey mind, but you have to learn to control it and recognize it. And I probably overdo that. because I didn't take this, thinking my stop would be in a real inopportune place. It wasn't asymmetrical, even though it's a 7, 8, there's 10 points, right? And from up here, it's 20 or 30 points. So, yeah, they're going to close the gap now. Right here, they did close the gap. Will they get accepted into value and trade across it, as I talked about in the gap rules? Don't know. And now I've got to drop off my gear and get ready for a meeting at 10. So that's just extra magical. Extra magical. Okay, drop it off for a meeting now, unfortunately. Here we are back at this desk now. That do is over with. Now, what is this? Okay, so we've keep teasing around this value area. So they keep bouncing out of value. And they keep doing this IB low up to the VWAP thing, and that just breaks my brain to be able to short up here this high below this really, really widely known level where all the stops in the world from retail are just above, and then mid even more. And I think it's about twice now that trade is taken off for multiple points. I don't know what to think about that kind of thing. Look at this one here. Look at this time. Uh, and now a short would be a very poor trade location. This swing high would be sort of acceptable, but your stop is right in the middle of all this traffic. This IB low continuation here is the setup to have been watching for. I don't think. Well, they've now brought value down to just a few ticks above developing value area high. I mean, previous value area high, and inside of the gap. So what are they going to do now? There's that world famous VPOC migration that always clobbers me. They don't look too anxious to trade into value, however, from yesterday. Yeah. Now, this would obviously be a really bad trade location, even though it is at this high VPOC migration lower, because there is not 3 points from here to the major level, which is the POC. It is working out, but that wouldn't be an intelligent or a vetted trade for my trade plan. For sure. If they can get it through that value area, they're going to take it down, I would think. But what do I know? Oh, yeah. A real pivotal point here. Unfortunately, this would be a likely suspect for a short, but absolutely impossible for trade location. 3 points is right here. Your stop is smack in the middle of all of that with the VPOC above you. Well, and there's a perfectly good reason why not to have done that. Lots of buyers hitting in here and going no place. 39 stops out, one stop over here. Well, you have to think a lot of stops are living down there. But they don't seem to be able to get into them. And we're approaching lunchtime, so there's always the possibility of a squeeze for all these shorts the entire day here. I've been short. Oh, I don't remember, but thank you. And they can't get it below that line to save their life. Imagine all the stops that are parked up down here. However, on the other side, all these guys are short. So there's stops here, here, and here, and here. And that might indicate a squeeze as we approach the lunch hour. 12 to 1 crap I don't like. And the NQ is not exactly falling out of bed either, which is kind of disappointing. So in RMT, rear view mirror trading, obviously, this VPOC migration setup, there's a VPOC migration. That's your setup. You trade down, trade back up and test it. Don't get anywhere. Get only 7 stops out. Down, up again. Buyers or sellers come in here. So, it worked out. Which is, that's just the way they do it on the internet, right? That's the way the gurus do it. Anybody can do that. I even pointed those out in the stream that might be a situation. However, hard time taking a trade away from the POC, as I mentioned, and I questioned it and didn't take it. So I don't have a vetted trade around that. I would love to, as I've said, probably ad nauseum here on the stream, mainly because with so many other setups, there is a gray area. It's up to interpretation. There's no freaking interpretation. Did this big yellow brick road zoom down here? Yes, it did. Well, there you are. It went from up to down. That's migration lower. So then that's the first bit. But the hard part for me around this one, obviously, definitely, is the context and the trigger and enough examples of that to determine whether, to vet that trade. What is the probability of this happening and then taking this, and here's the trigger kind of thing? What is the probability of that? Is it a positive probability or not? I can't figure it out. I'd love to, because it's so obvious. Now, this IB continuation, much simpler. Traded up here, tested up here, didn't go any higher, came down, came back up, and that's the short. I didn't take it as I narrated on the stream here because of the VWAP in the mid just above where everybody puts their stops. I would want to see them take these stops out and then go down. Didn't happen. And at some point in time, we're going to break through the bottom of this thing and all these stops are going to hit and it's going to go zooming down there and I'm going to be all bummed out that I didn't take it. However, if I got short right here, where's my stop? Smack dab in the middle of all this where we've been back and forth 100 times. There we go. That's not a lot of stops, only 250. Not a lot of fuel for that heavy of a level. And here we go again. All right, let's try to narrate this exactly. So here's our VPOC migration lower. Now, what are we going to do? Taking this mechanical short right ahead of the VWAP value area high, which we have not been able to stick it below. Looks like a real low probability trade. Also, This is 92.25 and this is 90.5. So it's only 2 points to that level. Meaning in my mind, there's no trade there. Also, what is the criteria? And here we have the full session also joining down here. What's the criteria, the trigger, and the trigger for this setup? I would expect they're going to come back up here and test this if it's too high, still too high, and then trade lower. Now, 93 to 92, that's only one. It's only a point away for the VPOC. Wow, there's so many. You know, this is like 1,000 shades of pink, this crap. And now we're up here to 3.5, right? So we're only a point down to here. And we would be, no, that's only 2 points. The value area high. Looks like we're going to get down there. But this is pretty sticky soup down here. And this is the hard part about trading as a business. It gets real boring and real frustrating. Sticking to your rules and, you know, or sticking to your guns or whatever however you want to say it, having self-control. I don't know, pick a word. I'm really sorry that I was in that call and missed that IB continuation test. That would have been one I would have taken, I think. I know I narrated the first one. And I did talk about it, but that VWAP being so close at hand put me off. Easily seen over here. We test back up to the IB low, but they're right up and test the VWAP. Beautiful short, but this sticky mess down here at the bottom, pretty nasty. Here we go with the value area thing again. They are just spanking these guys. Imagine how many retail people have been chopped up here. It's definitely retail soup right here for sure. These consolidations are just killers for most of those guys. Okay. I gotta do something here I forgot about. Always wanna. I'm not sure if I mentioned it earlier in my opening blurb about the purpose of the stream, but the reason that I stream it to YouTube is because I can view it on different devices, and it's got my narration and video. Bookmap has a really super recording feature that every tick, if you have it turned on, every tick, every price movement, every order, every time you move a stop, anything like that is all recorded perfectly, and you can replay it, and it is as smooth and perfect as the live market, but it doesn't record audio. So there you go. And that's the big component. I mean, it's pretty easy to see what I was looking at. The important part is what was I thinking, at least in my opinion. So that's something that I forgot to mention. Probably. And you got to think that at some point this it's just going to break one way or the other. I mean, that's how it works. Now, the last two times we did this, consolidation, breakup, consolidation, breakup. Here we are with another consolidation. What are we going to do? It's kind of suspicious that they've got just this little, couple of ticks down here of excess when we have quite a good taper with a little bit of a blurb up here at the top. Typically there's more excess on both ends. If you want to, the more perfect kurtosis a profile or a distribution has, it comes to a taper on both ends, right? I don't know why this chat keeps doing that. It keeps telling me I need to log in. Don't remember how. It sure as the world that's not doing anything. What happens if I just close it and open it back up again? I wonder if it does it automatically. Usually it goes automatically. Earlier it was, and now it's just not. I don't even remember how to log into the damn thing, to be honest with you. Well, maybe they're going to get somewhere now. I don't know. Got the previous close down here, low volume node. Got a high volume node here from the micro composite, low volume node down here. Let's put in a new all-time high by a hell of a long ways up here. Another new all-time high. Where'd the last one go? I guess it must be underneath it here. There we go. Oh, that's the gap high. Oh. I don't know why that, I don't know where that all-time high went. I must have deleted it by accident. I got. I know what I need to do here. There we go. I need to put a, I wanted to put a previous all-time high down there. At that level, which was 57, 55, 75. There we go. Boy, they can't make this. They can't get this sumbitch to run to save their lives. I'm not going to worry about it. Now we're into 12 o'clock. I'll mess with something else. Let's see if I can break this chat. If I close the chat bot out, boom, and then docs, I put a new doc. Live chat, okay. Now, wants me to sign in again. But I can't answer. That sucks. Mm-mm. So frustrating when stuff works and then doesn't work anymore. Like that. Like my YouTube studio comes open, everything works fine. The chat normally is there on that dock, and then all of a sudden it just doesn't work. It wants me to sign in, and I'm not sure what email exactly I use there because it's, whether I use just I would think I use my stream credentials, but that makes me wonder why it's not picking them up. Pretty weird. And then on the next tomorrow, it'll all work like $1 million. I don't know. Well, so we haven't had a viable trade in a long time. The last one would have been I suppose I should have just been a big boy and taken that IB continuation, even though it was right at tested right up to the VWAP. The problem with that is that wouldn't have satisfied the 3-point or the range requirement for the entry. You see what I mean? The entry right here, right? It tested the VWAP, and it's not 3 points. It's 06 to 04. It's only 2 points from here to the level. The next trade would have been this one, test up here, and then you're in the middle of all this soup. I've really got to think a lot about this. I've got to reevaluate this whole idea of the range. And when I make a rule, I don't have any problem sticking to it. Unfortunately, I'm not. Well, I don't know, fortunately or not, actually. But anyway, that's not an issue. If I say I'm not going to do that, as I have said, and it's been pretty obvious on these streams, I don't take it. Now, maybe that's where this is where I think it's so important to have. Now, why is that doing that? This is why I think it's so important. How weird. I just noticed that my YouTube channel stream was way behind updating the YouTube stream on my phone. How the hell does that work? Well, Jesus, what I was saying was, that's why I think it's so important to have a reliable backtesting system where parameters can be easily changed quickly to get comparative analysis. Because if you're doing statistics, you can't change 13 parameters at once, right? You got to change one or maybe two. For example, if I decide I want to test maybe a 16-tick stop is better than a 12-tick stop. Well, by design, a 16-tick stop means I've got to have a 16-tick risk-neutral scale, and then see how that works. Then leave the stops in the scale alone and see and do what ifs with the second runner or the second target. Same idea with the 3-point range. Maybe more rules around qualifying levels that are preventative, And what prompted that whole diatribe is right here. Okay, this is the cleanest IB continuation. Big short down 13, 14 handles. Okay, but two things. That's just below this level of the mid and the VWAP. So those are two levels, very high probability for stops above there. But you could be asymmetrical because you could just be a little bit above it. The problem is there's not 3 points to the IB low Or the this right here is, and that's got to be careful about that. This level wasn't there here. This level is now down here because it's plotting this. So when I was looking at this trade, this pink line of the current RTH VWAP would have been up here. Right there. Would have been right there, right? So close to the VWAP and the previous mid, or the ET overnight mid. And then the big criteria is there's not 3 points to the IB low. So does that mean you let it fall through? And there's no real, you let it fall through and then think you're going to be quick enough to catch this test, or maybe this test, and short it and away you go, I guess. But let's look at that. So right here is 03, and up here you're at 05. Well, that's pretty much putting your stop above, but just barely. So that you got to be real quick and make a fast decision there. I'm not sure I'm that good at analyzing all of this, to be honest with you. And part of this, my problem lately, now that I'm focused on all of this vetting and all these kind of structured trade things, basically, which have arisen out of the TLab stuff, and because I believe it's true, I forgot where I was going with that, but I would say that I succumb to paralysis by analysis frequently. And, let's look at this now. Okay, so here's the VPOC migration down, traded up, do. Which one of these would have you not picked? Down, back up. Oh, is this the one you'd pick now? So that's 3. This is 2. Okay, so now you're short. Now you're okay. I mean, but in hindsight, it's real simple to see these now. See this one here now. But at the time, this looked good. Here's a real test up. That looked good. Now, granted, you're just sweating bullets here and you're not stopped out and you're trading in the right direction down here. But that hard right edge is a tough spot to be, and it's so easy for the rear view mirror concept to enter the picture. I'd like to figure out how to quickly sign into that, what the story is with that. I would think that if I was streaming live, surely the chat would know. If you open the YouTube studio, the chat knows it knows which chat's which. I think it's kind of bizarre that I don't have that. That's not the case. Anyway, yeah. So there's a lot of issues I've got here, obviously. But I always err, or I'm trying to always err on the side of caution. And I might point out that this, by the very nature of the fact that you're trading the VPOC migration, you're going to be most of the time not have the range to the major level, which is the VPOC. And anyways, assuming that you took this trade, you got the value area high, the developing value area high. None of them are 3 points apart. And all of this crap, all of this traffic, all of this levels, and you're only at 4 points down here below it all. So not really a high probability risk reward, I don't think, which is a pretty important part to talk about. I need to actually make a permanent hotkey for that. The importance of and that's the importance of risk reward. Why is this not? Oh, shit. I don't know what I just did there. I don't want to open anything. Oh, okay. Didn't want to do that. The importance of risk reward long term. And I think I touched on this before, and I'll have to make a permanent one for it. It is almost impossible, but if not that, at least really tough sledding to have a successful long-term profitability in your trading business with a one-to-one risk reward. And that's where you're at with the scale, right? Now, here we go. Finally, we're going to break down with that and get moving, maybe? I don't know. My point is that, if you're only shooting for a one-to-one risk reward ratio, you take 2 stops in a row. You've got to have 3 winners in a row to end up one positive trade. Right? I mean, yeah, it's obvious, but think about that for a second. Now, if you have a 3-to-1 risk reward ratio and your setups that you have vetted, statistically proven that works, and you have 2 stops in a row, you've only got to get 1 stop, 1 winning trade to make up for the 2 stops that you lost and be ahead by 1. So it's so much easier, and so much more important. The old adage, cut your losers short and let your winners run, all that crap. But that's what they're talking about. I mean, every one of these trades where you get 25, 30 points, that's a huge benefit to your account, your overall profitability, and your success as a trader. If you think you're going to scalp your way to fame and fortune, smacking out 1 lots, or 2 lots with a 1-to-1 ratio, real tough. Real tough. Again, this is all stuff that you need to verify with an accurate, fast, convenient backtest system on a good data set. There we go. Now we're finally breaking loose. We've got an undervalue area. We're finally going to try to get some traction to the low side. And of course, it's happening over the lunch hour, which is magical. Now, not really a place I could have gotten on, other than, like I said, no matter how you look at the VPOC migration trade, and say you took this entry, at no point here did you have 3 points. And that's not saying some bitch is not going to fall out of bed and go all the way across value, which is typically what would be certainly reasonable to expect. And they don't have far to go, right? They'd only have to get down to here for value. They only got to get it down to 74-ish, and they're across value. And we also have naked volume point of control, settlement, high volume node, low volume node, and the MCVPOC. So we got a whole buttload of stuff down here, and the overnight low. So there's a whole buttload of levels down here to hit or targets to hit. And unfortunately, I didn't get on the right side of it. Anything down here now would be chasing or breakouting, which I consider to be a FOMO error. Let's say we get on here at 5 and we're right on the developing value area low and smack dab in the middle of all of this crap with our stop. Trade location, the importance of trade entry location. Huge. It's a huge deal. But we seem to be accepting now and trading inside of value. Or at least that would seem to be the case. And up here even is not a good trade location. That's 88. There's our stop. That's pretty gruesome. Pretty gruesome looking, isn't it? And the POC is just above. That 3-point range thing is keeping me out of a lot of stuff. Here. 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 And none of these would have stopped out. Up here, you wouldn't have stopped out. Here, you wouldn't be stopped out. Here, you wouldn't be stopped out. I mean, yeah, you'd be, it'd be kind of nerve-wracking, but, and of course, down you go. The test up to the developing value area low there. Looks like a good one. Now they're going to get to close and probably overnight low in settlement. And, bear in mind that this test up here, which I consciously didn't take, is now looking at about 10 points. This is where FOMO starts to hit you because you're thinking, oh, gee whiz. And we're still green because we're above settlement. Don't forget. All those retail platforms have got green numbers up there at the top. Sweet birthday, Mom. Well, looks like I missed another IB continuation trade here. But notice how these green lines came back into, yes, many weird things here. Whoa. So, well, again, that would have been IB high with the Globex VWAP. Oh, there's a good one there. So what are we going to be doing here? Might be doing a mean reversion. That might be a reasonable idea. Up here to the VWAP. And then mean revert to the RTH or the BPOC. Almost got to my almost got to the gap close prediction of value we're at. Oh, this is really terrible. I'm not sure why this is unavailable. There they are. I don't know why that was happening. Weird. We tested right down to the right down exactly to the VP MCVPOC. Pretty amazing. This previous high is a range, right? So we closed gap, traded down up to there's my IB high continuation miss down to right down to and exactly touching the micro composite VPOC. And now we're back up out of this range again, and it looks like they're not too tickled about getting back into it. And anybody that's short up in here is just sitting on them. Which would be nice, but you see that there's absolutely, with my range requirement, look at this mess. Boom, 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 boom. Well, how the hell do you do that? And here we are at the mid and IB low and all this crap again. So it's a little worrisome at this point in the game. That could have been an impulsive mistake there. I was thinking about that, but I wasn't really planning to make that exactly. Well, I was thinking pretty serious about that. My fingers read my mind, I guess. I was thinking of it here when we got past the VWAP, if we were going to do a mean reversion back down to our POC. And who knows? But it's in the trade anyway. Well, this is a pretty classic example of what poor trade entry can do to your overall positioning. That's what I've been talking about a lot here. And you see, now, it did put my stop out above the swing high and above those major levels. But would have been a hell of a lot better up at the top of that swing, right? The problem I'm having lately is that the 3-point story. And now I got a long ways to go to get down here to this limit. This is my target for risk neutral. I got to clear that 99, that 5,800 thing. That's going to be a big block, I think. And we're past 2 o'clock. Let's see something here, boys and girls. I'm not liking the looks of this. This is the obstacle down here that we got to get past, if we can, to the short side, without stopping out first, which is, obviously a possibility. Now, I could move the stop up above the IB low, which would require moving my scale target further down. Right now, it's not at a very good location because it's below the previous RTH high. So, I don't know. I don't know what all this noise is either. Seems like I got... Okay, that makes perfect sense, I guess. Okay. And now we just let her play out. Got a full hour here before I have to go get Tam. Looking here for the VPOC mean reversion trade is what I'm basically looking at. Back to VPOC. But they're having a real hard time getting below that, so getting under this century number there at 58. And then we've got to clear this major obstacle here at the previous high. We get down through that previous high, I'm likely to bring the stop up there to break even, because that's a pretty, seems like a pretty heavy line in the sand for these guys. And you never know, like, you know, the outcome of every trade is random. And it's a random market, and the outcome of every trade is 50-50. So, but I think one of my bigger problems is that I put myself on the back foot a lot with poor entries, which I've talked about quite a bit here. Not getting any selling here, which is really pretty annoying. Is there some kind of news or some nonsense going to happen? No. I mean, there's been people talking all day, but okay. Now, it's worth pointing out here that had I shorted right at the top of that, just below the VPOC or the IB low, or even been a little earlier to the party and shorted over here, I would be scaled now. It's scaled at 58, right? So that's a pretty important thing. And this kind of consolidation doesn't make me feel all warm and fuzzy, obviously. Because they can flop this either direction in a heartbeat. And they're not getting any traction lower, which is pretty disappointing. And Tom's short from 05, so he's, you know, he took that test up here to the full session VWAP and the IB low, figuring on the mean reversion back down to the VOC. So he's been scratched, you know, he's been scaled for a while now, and that's the difference in good order entry location. You got to think about many things here. This coiling thing is not good, and it's likely to break one way or the other in a hurry. So I'm hoping, obviously, I'm rooting for it to break my way, but it could go either direction. Absolutely. And there's nothing you can do about that except just put it on and watch. I am disappointed that we're not getting any selling here. I don't know what's the story with that. I don't know what that means, actually. Put it on, it's been 15 minutes going exactly no place. I'm tempted to take my stop above the IB low, which would necessitate moving my first scale lower by the 2 ticks or whatever it is, just because of the poor placement there. But I'm not sure what to think about that now. I don't know if that makes sense or not. Now, somebody else would say, well, you put it up here above these swings, and that's above the mid if you want to be real careful about it. But that's crazy, I think. I don't like this price action right here, though. That's for sure. I think I'll move this stop up above there. And then that requires moving these down 2 ticks. And that's probably going to put me out here anyway. So they're going to go up through this, it looks like. Yeah. And there's stop to the tick. Pretty weird. Pretty disappointing. Look at this now. Right to the tick. You know, it's really, really irritating. And had my entry been proper, I would be up here someplace. And now those sons of bitches are going to take my stop to the tick and then go down the other way. Sure as the world. How does that work, huh? Well, I can tell you one thing. You see this big liquidity that's been sitting in here? When I moved my stop, that was pretty stupid. I didn't go above that liquidity. Since I was moving it anyway, that was a real bad move. And I would still be in the trade. Now, it isn't any good yet, but that was poor observation on my part, not to see that liquidity sitting there. And that's right where it stopped, right? You see. Well, I'm going to let it make a move out of this mess if it can. And if it can't, okay. And here we go. That was a real costly mistake. You see that? By moving that stop, not noticing this liquidity and going just above that full session Globex, I took a stop and this trade would still be valid. Poor entry, but this trade would still be active and valid at this point. And we still have ground to go down there for the overnight, for the VPOC, for mean reversion. I'm not sure that that's going to happen at this point in the day, though. Looks like they're kind of excited to stay out of that range for whatever reason. Notice that had I moved this above this, when I moved the stop above IB low, I should have been noticing this liquidity gone just above the full session VWAP, and it would still be it would still be in the trade. Not that that's a good idea, but anytime that you reposition because of a poor entry, you have to also do that with the risk neutral or with the risk neutral scale, which I did. And then, accept the outcome at that point. So, I don't know what this means down there. Yellow thing. Oh, okay, it's POC. All right. And here we go. Back to break even. The more this progresses, the less interested I become to put a trade out. And the more disappointed I am with myself for not just moving that stop just above the liquidity. And I mean, I would moved it, of course, which I typically don't do, and doesn't matter. I would have stopped either way. But had I moved, since it was being moved above the liquidity, would have made a big difference. And now, it's right back to my entry. 58's a big number. Are they going to take it down below back into range and down to the VPOC, which was my target? And it looks like so. Looks like that's going to happen. Pretty disappointing. So there you are. Pretty darn disappointing, huh? And what's even funnier is you notice that this is just one tick up into that, just one up into that liquidity. Not even a full bar, just a little squiggle up here. And that was enough for the stop. And now it's a real bad, real crapshoot to see what's going to happen here. Whether they would take it back down and revert to back down to the VPOC or not. That's a pretty big. That's a pretty big if. 30. I don't think putting that trade back, that short out is a good idea at this point. Just don't see a lot of either buying or selling. Oh, there you go. Up here. Don't see a lot of either one. Up here. Down here, or however you want to look at it. And here's the original risk neutral scale right there. I have no sense of where it could go. Now they didn't make it stick below that previous RTH high. They came down there and looked at it, didn't make it stick. Yeah. Typically, when you come up to the VWAP and stuff from the bottom and the mid, they approach from the bottom, they're going to sell it again. Like here, or here, or here. But at this point in the day, I have no idea where they would want to take this thing. I'm always expecting that they're going to mean revert to POC, but that didn't work out very good a minute ago. So it's weird that there doesn't look to be any kind of volume here. Look at these little teeny volume dots. Strange. Oh, I completely forgot to put the trade stuff in there. Oh, that's stupid. I'll just have to put the rest of it in later. It was at about whatever time it was. From there. 45. Oh, it was 37 minutes. Okay, perfect. This is real annoying. I might make a requirement of myself to have at least one trade a day or maybe two to kind of, stop being so overly cautious, I guess. That's probably a good idea. I think that'll be part of the new idea here. Ah, these consolidations right around a view app or something is just really annoying and a real low probability of a positive outcome. If they got to go charging down through that high and then get out it and then get down, head for lower ground if they're going to get to the view app, and they got pretty close to where my scale would have been had this happened. When they started down here, I would have certainly brought the scale up to break even, or the stops up to break even, or some, ahead of, a little ahead maybe. Probably actually would have done that here on this drop, would have brought it to break even, which would mean I'd have stopped out here for scratch. Wow. So they've got to get this up to 15,196 to migrate the VPOC up there. I don't know what to think about this market on close thing at 5 more minutes. 10 more minutes. No, 5 minutes. I'm sorry. It's pretty disappointing, though. I can tell you that much. Okay, you go first. Scared. So the market on close orders are going to be released here at 1450, and that's always a pop. It's a question of which way is it going to pop. Looking at this, I'm guessing up, but that's completely, I have no clue, obviously. And I don't know any way to know that. Not much of a pop. That's pretty strange. That's generally quite a big maneuver. Better bust a move. I got things to do. Better bust a move here. I got things to do. Oh, they're going to do this. What does this mean? I don't know. They are just real important to look at this consolidation in this zipper here. Bust a move. They're going to run there. I was thinking about taking a loan just to get even, but 2 minutes till the cash close and lots of liquidity above us. I don't think that's a smart maneuver. I think this is just shorts and dorks covering here. Yeah, I'm not going to do anything. Remember that I just got to the exactly there. Interesting, huh? And cash close in a couple seconds. I don't imagine there'll be a closing swing trade to amount to a hill of beans. Well, I was wrong. Gotta shut that stupid thing off. Well, that was a 6-point closing swing trade right there, real quick, like a bunny. And there's the 1500 cash close. So I will be not enjoying myself here for this. That's the funniest. Boy, they really hold those lines today. So I will be picking it up tomorrow. Yeah. Have a great night. See you in the morning.